do have the sell side over here marked out, or I did have it on ES. Let me mark it out over here. We have relative equal lows with the 8:30 news and lows over here from London session. Obviously still looking at London low, but for an ICT macro, this is what I'm favoring. Obviously with that large dump from yesterday's PM session, traded back up into the range, and we're holding this premium imbalance up here. So if you take your fib from high to low, we are within premium up here, right? That's why we didn't just fill this one. It came all the way up into premium, tap into here. So I'm watching for a change in state of delivery, possible reversal as we target the lows. We still have London and Asian low that's left untapped. So for 950 macro, I would assume we don't have enough data to enter here unless we get clear displacement out of the range. RTH gap, yeah. Do have a nice RTH gap lower too. Got 147 points. We'll mark out consequent encroachment of this really quickly. By the way, we did close below this down closing candle. It is a small order block, but we did close all the way through. So we can fill up into that gap and respect it. We got a bearish order block there. Sibi, relative equal lows, the sell side target. Obviously more downside could be expected. So I am currently watching that Sibi for potential shorting opportunity. Okay, we didn't get the Sibi fill like I wanted to see. I wanted to short off that gap. We already got 20 points off of it. We just barely missed it there by what? A point. So we'll just wait for 10 a.m., right? Because if that first entry you miss either with a retracement or reversal, most times if it's a true B classification, if you're familiar with the PDF, so an entry at 950 where we get a low risk entry and then a continuation lower, you'll get a retracement at around 10 o'clock. We're right at 10 o'clock here, so if we can fill back up into this tiny Sibi here, back up to the Sibi at around 10 o'clock, could look at taking that as a shorting opportunity. There's your fill of the gap. So if you wanted to use this as a retracement opportunity for 10 a.m., could be targeting the 20 down here. So your quick little target. You could be looking for even the further sell side or London low if you're really bearish. I'm also watching CISD down here. If it closes through the CISD, then we're chilling. Yep, we're good right now. So look for, you could actually look for sell side all the way to 9:30 open. Alright, so we're not holding the CISD at all, so you can expect speed as we just efficiently filled this gap right here. Okay, so look for speed and look for sell side at 16,859. And there's a sell side bagged and tagged. I took that short and then I wrote it 20 points with the first contract, and then I added another one and then took another 20, or took actually the sell side off at the relative equal lows. I told you before, we're expecting either a Judas swing or displacement into the sell side. I was favoring the sell side this morning. Okay, we had a nice dip lower right here with the breakaway gap, and I told you I was looking at this order block that we closed all the way through. Even though it was a tiny order block, we closed all the way through, right? I put my limit order here originally. We failed to fill into the breakaway, closed below. And then I also told you that even if we missed this limit order, right, even if you didn't want to mark it in off the inversion order block, that's fine. Because normally, what you do see is a retracement or reversal at 10 a.m. Now, this gap here, we're going to go gap by gap. So this gap here, wicked into, right, multiple times. We close all the way bearishly. So we have clear sell side into this gap and into this gap right here, right? Clear sell side, you can see. Now, for it to be efficient, what do you need? You need both buy side and sell side, right? So we're expecting a couple different things, right? We're expecting retracement at 10 a.m. We need to efficiently fill these Sibis, and we have sell side target plus RTH gap lower. So got the retracement at 10 a.m. back into this red Sibi that I've outlined. Okay, that's where I entered short. Now this green candle you may think is, it looks scary because we just traded all the way back lower and then shot back up at 10:01. This is expected. You can expect something like this because we have clear sell side all the way through. You need a clear buying. So we got the clear buying all the way up, right? Now when I saw this candle, my eye immediately kind of draws to this last down closing candle to see if we want a CISD, right? Because we're getting the reverse or retrace at 10 a.m. and I was favoring the retracement. So Let me remove some of this stuff. This last down closing candle could serve as your CISD. But after this candle right here, close all the way through it, all the way through this order block right here. That's where I added my second contract. So basically failing to CISD means that this was a true retracement. I hope that kind of makes sense. And we were going to target sell side. And then rode it, we traded a little bit more up into this gap. Now if I switch to a higher time frame, like a 2 minute, you can see it's basically clear buying and selling all the 2, 3 minute, clear wicking back and forth, 4 minute, multiple wicks back and forth, right? So it's efficiently delivered on all the time frames. But normally when you see a reversal, something like this, see how we got this, we got the sell side liquidity ran out, we tapped into RTH gap, equilibrium, and then we create this last down closing candle and we shoot up aggressively past the gap right here technically. So we're breaking a bearish PD array with the gap, we're closing all the way through it. And then in the process, we leave this down closing candle. So this is the down closing candle I'm watching for CISD. Okay, so if we respect it like this, even though it's the wick, we respect it and start trading back off, that to me is an early stage of reversal. That's like the most earliest stage, obviously besides turtle soup, that you can get of a reversal stage of delivery. So this candle in here, when I saw this same exact, see how it's basically the same exact thing? We have this down closing candle shoot up, down closing candle shoot up. So when I saw this happen, right, and where you sometimes can expect a reversal at 10 a.m., I want to be very, very careful, either pyramiding or just keeping my stop tight. So when I saw this next candle, this 1002 candle, shoot all the way lower past the CISD, right? So this would be the same exact line as you'd be using down here, right? CISD, CISD, okay? Trade all the way through it. That to me was a great sign that we wanted to continue bearish movement. But that's where I entered my second contract. Now speed is when you want to see efficient delivery. Okay, so over here, why do we get speed over here? Why was it so continuous with no order blocks forming? Because if you look, we have this gap, we have all this price action right next to it that did not leave an unfilled gap, right? We have a filled gap with both buying and selling here, filled gap with both buying and selling here. We have no gaps below this. We do the next gap that's left unfilled is this one right here, right? If I remove this. So this pretty efficiently filled, right? Almost all the way down to this to the discount end. We got both buying and selling, even with multiple different wicks. Okay, so that would classify as pretty efficient. If we remove this, what's the next imbalance? We have this imbalance down here, right? So we quickly get speed all the way past the efficient delivery, quickly get speed all the way into the inefficient delivered gap. Then you see what? Buying and selling. Efficient delivery now, right? Now, what's the next gap past this? You have this gap right here. Now, this gap right here is a breakaway gap. You don't see a breakaway gap hold most times. So that's why you expect speed through the breakaway gap, just like how you got it here, right? We have this breakaway gap, we see speed all the way through it. That's where you expect the speed into the sell side. Then what do we see? CISD down here, right? This last down closing candle, trade back into it, respecting it. Early stage of reversal. Start trading back up. Inefficient price delivery in here, right? So we trade through it. Then we fill it again with selling. Trade back up. Now you can see it in here again, right? We have efficient delivery from this gap, all in here, right? We have no imbalances up until this breakaway. So you just see quick acceleration, right? We have no order blocks forming, just back and forth, quick, closing up. Speed all the way through, past the breakaway that doesn't create a lot of resistance. And then now you probably most likely will see a retracement, potentially back up into this range. But I told you, internal range liquidity. We're looking for potentially a market maker sell model now. And now we're trading back lower. Now, what do you see here, right? No imbalances we have to fill. Quick speed. This gap, we most likely will see a retracement off. So if I remove this, remove this gap right here. See how it was inefficiently delivered? Right? We have this gap. We have just this wick. Now, I told you before in previous streams, this kind of wick, one wick, is still inefficient. If we have numerous wicks where it's going back and forth in that same range, then that would, you could trim your bisi or trim your fair value gap. You see how like we had this gap here, and we had numerous wicks all the way through. That's efficient delivery. Okay, because on lower time frames, wicks will be candle bodies. So we're expecting a bounce out of this gap, and look what we're doing. Respecting the gap, right? So at 10:30, if preferably if we want to retrace into this short-term premium, that would be a nice shorting opportunity off this gap. These Christmas colors. We'll go back to regular one.